Else is moving coppers. Larry Shover, he's Chief Investment Officer at SFG Alternatives, joining us from out there in Chicago. So let's talk about China first of all, Larry, shall we? Because we have had some economic data out from China, including its most recent decline in PMI, which is a measure of manufacturing, raising concerns about demand for copper. How serious do you think the demand problem from China is?
Well, I think it's pretty serious. I mean, let's keep something in mind that concentrated copper is still in surplus. It's the refined copper that's being squeezed. So with any movement in PMI, all eyes are on that right now. And as you said, this is the first drop that we've seen since July. There's a great divergence between BRICS and the G4 countries. So people are very concerned, especially when it comes to base metals.
And so does that mean we're going to continue to see declines in copper prices?
Well, I think right now we're in a broad-based bottoming pattern. I mean, that's technically speaking, because there's so many mixed signals. When you look at supply, I mean, this is something we haven't heard in so long, but Chilean copper output in November was 7.5% better year on year. But on top of that, remember, there's also supply of supply. And if I had $1 for every time I heard that mine output was better than last year, I think I'd be very, very wealthy. So it's hard to say. I mean, again, concentrate is in surplus. Stocks are being drawn down on the refined end as judged by Shanghai, London, and New York, but there's still a lot of unrefined copper right behind that to fill the gap. So at best, I think prices are going to be stable. Price action is going to be really hard, maybe poor to stable at best.
And, you know, in December, we did see a little bit of a pickup in copper prices, but a lot of people were saying that was just due to short covering. Do you think there's any more steam left in a short covering rally here?
You know, I think any kind of rally like above 345 in a March contract, we'll start seeing some selling. I think the shorts have all been squeezed out by and large, at least by the reports that I've seen by the CFTC. So right now it seems like a mixed signal technical trade, not a whole lot of short covering right now. Let's
look a little bit further out to this year, because you said there is this sort of gap between so-called developed nations and the BRIC countries, for example. Yeah. And certainly, you know, growth here in the U.S. is estimated to pick up this year. If you look out not just over the past few months, I know you're more of a short-term guy, but if you do try and look out a little bit further, do you see some better fundamentals for copper prices just because of a better global economic picture?
Yeah, I mean, 3 to 6 months, I think, is poor to stable. Beyond that, I think prices will get better because the price won't be good enough for refineries to refine the copper. We're going to see a vast amount of surplus in the concentrate. It's going to take time for that to refine to get to market. So long-term, meaning a year, 3 years out, price action will resume. But right now, I don't see it getting much above 350 at very best between now and the next 6 months.
All right, Dr. Copper, not a very good prescription here. Larry Shover, thank you so much for joining us. Appreciate it. We'll be